Capy wants melons. Capy has no pebbles. This is historically Capy's entire personality. So Capy goes to the riverbank and the bank hands over a small, shiny pink shell. Tap the shell at the melon stand and the melons are yours. Today. No pebbles required. The banker smiles a very particular smile. Remember that smile.
Take the shell. Everyone has a shell. It is basically free.
Here is what actually happened. The bank paid the melon vendor, not Capy, the bank. Which means Capy now owes the bank those pebbles, and Capy has until the next full moon to hand them back. And this is the part most Capys never hear. If Capy pays back every single pebble before that moon, the shell costs Capy absolutely nothing, free melons on credit. The bank still smiles. We will get to why. But the bank does not hand shiny shells to just any Capy wandering past. First, Capy must prove something, that Capy pays things back, in full, on time, again and again. Every one of those little promises gets squashed down into one single number, the trust score. It is the bank's opinion of Capy, expressed as maths. Above 740, the bank likes Capy. Above 800, the bank adores Capy and offers the good shells. Below 580, the bank suddenly remembers a meeting.
A meeting? Yes, a very important meeting. Elsewhere.
And a shell is not a bottomless pit. A first shell usually lets Capy borrow about 1,000 pebbles and not one pebble more. That ceiling has a name, the shell limit. As Capy proves itself moon after moon, the bank quietly raises that ceiling. Trust in this river is measured in pebbles. So why borrow at all when Capy could simply use its own pebbles? There are genuinely good reasons, and this is the part the scary videos skip. A big purchase can be spread across several moons instead of gutting Capy's pile in one afternoon. And every moon Capy pays on time, the trust score climbs, which is what Capy will need later for a truly enormous loan, like a burrow. Then there is the emergency, the raft breaks, the roof leaks. Capy does not get to schedule those. And here's the one almost nobody thinks about, safety. If a thief steals Capy's shell and goes on a melon spree, those are the bank's pebbles vanishing, not Capy's. The bank notices remarkably fast when it is their own pebbles. Same with a scam. If Capy buys melons that never arrive, the bank steps in and fights for Capy, not out of love, because it is their pebbles on the line. But the real reason most Capys sign up? Rewards. The bank wants Capy tapping that shell, so it pays Capy to do it. Pebbles back on every purchase, points for river crossings, bonus pebbles just for signing up.
Free pebbles? For spending? What is the catch?
And the shells come in flavors. One gives extra pebbles back on everyday melons. One hoards points for a big trip upriver. And one is a heavy golden shell, offered only to the wealthiest Capys, who of course are the Capys who least need free things. So, free melons now, pebbles back, protection from thieves, and the bank is delighted. A perfect arrangement. What could possibly go wrong?
Oh no, there is a catch.
This is what goes wrong. If Capy does not hand back every pebble by the moon, the bank adds a charge on top. That charge is called interest, and interest is simply the price of borrowing. The maths is not scary. Capy borrows 100 pebbles at 10%. Capy hands back the 100, plus 10 more. That is it. That is interest. Now here is the one that ruins Capy's. Compound interest. It sounds boring on purpose. Capy borrows 100 pebbles. The rate is 2% a moon. Capy forgets to pay. After one moon, the bank adds 2% of 100, 2 pebbles. Capy now owes 102. After the second moon, the bank charges 2% of 102. That is 2 pebbles and 4 little ones. Capy owes 104. After the third, 106. And notice what is happening. The bank is charging on the new pile, not the pile Capy borrowed. The debt is growing on top of its own growth. The numbers look tiny. They are not tiny. This is precisely why shell debt is so brutally hard to climb out of. Every moon Capy does not pay, the hole digs itself a little deeper. Capy could pay just the minimum, and yes, that stops the late charges. But almost all of that payment goes straight to the interest and barely scratches what Capy actually borrowed. Capy can pay the minimum for years and still owe nearly the whole pile. And then there are the fees, a fee to set up the shell, a fee for paying late, a fee just for owning the shell for a year, a fee to pull pebbles out of the hole in the tree, a fee for using the shell too much, a fee for not using it enough, a fee for buying melons from the far bank.
A fee for not using it? Make it make sense.
Which brings us back to that smile. Remember the first video? Capy planted a melon tree to grow melons. The bank hands out shells for exactly the same reason. Capy is not the bank's customer. Capy is the bank's melon tree.
Capy is the tree. Capy was always the tree.
So, not advice, obviously. But if Capy were getting a shell, Capy would remember 7 things. Check the yearly rate before anything else. Pick the shell whose rewards match what Capy actually buys, not what Capy dreams of buying. Spend only what Capy can hand back this moon. Keep the borrowing under 1/3 of the limit, or the trust score sulks. Track every tap. Set a reminder before the moon. And always, always pay the whole pile. Do that, and the shell is a genuinely powerful tool that pays Capy to use it. Miss it, and the shell quietly turns Capy into someone else's orchard. This was Capy Cents. Capy is a capybara, not your financial advisor. And no, Capy will not co-sign for you.